All right, traders, it is the 13th of July, 2017. My name is Jameson. We're looking at a 60-minute candlestick chart here of copper. This is a follow-up to the little informal case study that I've been doing, trying to integrate footprint charts with the typical vertical bar candlestick charts for Wyckoff methodology. So this was very characteristic of accumulation. Kind of called today upside a little bit early. We didn't have that true spring, but we did develop the spring. We back tested it, and then I thought this is going to be a good entry. But when we're actually looking at the footprint chart, I think I said on video number 2, there still was some supply here. So as far as the bid-ask profile goes in a footprint chart, there are still some unfulfilled sellers. There are still some willing sellers, I guess, which then suggests that there is supply. So we rallied higher, kind of our sign of strength, right? If this is the creek here, that would be a minor sign of strength above that creek. Now we have a major sign of strength because we've actually broke through this level of resistance within this consolidation period that's here. But essentially, again, there was supply here. We rallied up, and then we back tested it, and we kind of resolved the not the imbalance or the willingness of sellers to sell here. So we resolved it, and then we rallied through. But when we rallied through, we did so very briskly with a lot of volume. And as we dipped, we created another opportunity where it looked like there's still supply here that could be absorbed. So as prices were rallying, I had speculated, I believe on video number 2, that prices are going to drop and retest this area, which actually correlates with a point of control here. And that's kind of what we're doing now. So let's look at a point and figure chart and correlate the findings. So here we are. This is a 60-minute chart. And then this is the area that I highlighted. And as we zoom in here, we'll start to see the bid-ask imbalance as profile, right? So we can see the candlesticks. That's these little lines that are present. And then as I zoom in, we can see the location of this imbalance here. So prices rallied away. I said, hey, I think prices are going to drop after the rally, and we're going to retest the zone, which is defined by this blue line that I drew on here. And as we expand it here, let's take a look. Here we are. So here's the level. Here's our bid. Here's our asks. We want to see buyers. We want to see bids, right? Because that demand is what's driving prices down. But we really should, if the auction has completely resolved, there would be a zero there. There'd be no more traders willing to sell. The presence of this 53 suggests that there is still some supply left. There's still some offers on the table. So that I speculated that prices would back test and make sure there's no more sellers that are there. And as we scroll through here, we can see prices rally. Let me kind of catch up. Here we are. Now we're dropping, and here we are again. So now we've broken down, and now we're kind of rallying higher. So this is where prices are tonight. We still have some supply, so now we're pinned, right? So why am I saying we're pinned? Because we dropped here, and there's still bids. There's still buyers that's here. So I think what's going to happen is that we're going to continue to drop and back test the previously mentioned supply, and they're going to rally back up and test highs around this 269.5 area and make sure there's no more buyers. I think I'm bullish, so I think that as we confirm the lower objective, or not the lower objective, but resolve the supply issue, not only will we retest highs, we'll actually rally through that level. So here we are here. There's as we broke down and now we rally away in the evening session, there's still some sellers. So that kind of puts us in a situation where we're bracketed between highs and lows. And then if I go back to the actual chart here, this is the area at which that supply exists. So if we come back and we test that level, we can start to see that here's a trend, right? So here's our trend line. So if we kind of come back and we back test this area here, we would have become oversold relative to this bullish ascending channel that exists, which is here. And we also now know that there's some buyers that still exist here. So I think we break back down, test the point of control, and then after the point of control, we rally back up and we see if there's any more demand, if there's any more bids up here. And this may be something that I start to use a little bit more consistently with the commodities to try to pinpoint better entries and improve swing trades while using the Wyckoff methodology in the context of the footprint charts. Hope you find it helpful, certainly interesting.